SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. We're going to have a quick look at Bitcoin and Ethereum. It's relatively simple, I suppose, at the moment. There's a range, we're stuck in a range, and the range can have continuation in either direction. We've got these wick lows around 20,500 and more or less these two wick highs. We're not going to bother with that second one. And it's a bit of a horizontal really, it's around 21,400. It also matches this peak, these areas here as well. So closures above 21,400 on a daily ideally, but 4 hourlies could probably do it. Would likely have continuation. The continuation, as far as I can see, would be on the weekly. We would target anywhere from this 200 exponential around 23,700 to the 50 exponential sitting around 25,000. But at this very moment in time, we're battling in this short-term time frame range, really. We're sort of range bound, and I wouldn't say we're massively bullish, nor are we bearish. We're kind of just stuck in this range, and sort of closures creeping out of here should have continuation one way or another. If we did break down from 20,500, I would imagine that we'd come down to the breakout level, which is around 19,000-ish area, you know, the lower 19,000 area. And again, that, you know, if we put ourselves back on the weekly, we would be looking for a 21 exponential to begin with as a major area. So that's about 19,600. So again, you know, decent moves on either direction. The thing to note on this is that the weekly can easily spark continuation on this. We've got this, there's no divergence. In fact, it's just a trending move when it comes to volume coming in on this. So that does lend itself to larger moves on the longer term. But the daily, obviously, as we all know, is like quite significantly overheated here, and we have printed a little bit of, well, it's not a little bit, it does exist. It's bearish divergence on the daily here on the last few legs up. Also, we can see that on the RSI. We were looking for an RSI breakout, and we can still look for an RSI breakout for momentum change and momentum shift, and that would complement this resistance breaking too. But for the moment, you know, we're just sort of like, I mean, we're just range bound. We can't call it accumulation, nor can we call it redistribution at this level, because we're basically just range bound. Same kind of thing goes for Ethereum. Ethereum sort of pushing this area, this $1,600 zone, and again, you know, being above 1,500, which is your 200 exponential on this daily, you know, range bound in a tight range for the moment, a range of from the bottom to the top 5%. So closures above here, 4 hourly, but preferably daily, should have continuation. You probably march all the way up to around 17,000 and probably beyond that, to be honest. Closures below here should pretty easily find its way back down to 1,400, sorry, and see where we go from there. So with all of that said, you know, what's traditional markets doing? So yesterday we had that decent pullback on the euro, and then sprung right back up. There's been, I suppose, bullish news, or should we say less bearish news for the euro. The euro is very strong, but there's a lot of talk from central bankers about what they plan on doing or what they plan on not doing, but rather than actually doing something, they're just talking about plans, and that's causing ripples in the currency market. The Dixie found a rejection on the 50 exponential moving average. Pretty bearish stuff, to be honest with you, continuing to go down. And the yen actually shot straight back up. We were talking about this on the live stream last night, Patreon live streams in the description below. 2 live streams a week, £7.50 a month. We were talking about the channel that we're in, this descending channel, whether we come straight up to the top or test it. Yeah, overnight, more or less, we came straight up to test the upper portion of the channel. We didn't hit the top, we hit the resistance. This resistance that was support here and became resistance here and support here, and we broke down from. So we came straight up to it, bang, and now we're getting a rejection from it. We like to look at the yen to dollar because it kind of is a clearer version of the Dixie, and for the moment still downtrending. That's fine, it's still downtrending, but with an eye to break out of this pattern at some point soon, but not right now, not today, not today, my mates, not today. S&P, we're waiting for the open on this one. Again, found ourselves the beginnings of a rejection on the S&P. And if we do get rejected from here, I would first of all target this zone around the here, which is around 3,800, give or take, with a view to maybe print a double bottom somewhere along the lines in the next few weeks, maybe month or so. But for the moment, we've just got a single drive of hidden bearish divergence and a rejection on this major trend line, which is so clear that anyone could see it. And again, just because something's clear and you can see it doesn't mean it's going to happen. It just gives you a little bit of an edge as to what you should expect to happen. Doesn't mean that it will. So overall, I'm kind of undecided about the general direction on the short-term timeframes. I think that traditional markets are going to play a major role because the World Economic Forum is taking place at the moment. There's just a lot of talk, a bit of rubbish talk, basically, just talking about nothing really, but important people talking about nothing, and markets are sitting and listening to see if there's anything that's significant, which there usually never is, to be honest with you. And so yeah, there is fundamental reasons why the markets are being kind of guarded and rubbish, to be honest with you. But that said, though, there's many setups on many altcoins, which are very tasty. It's just because everything's so overheated at the moment, and the overall threat that I've, from my analysis from the last week or two in traditional markets still remains the same. I have to look at it through that lens, and so I'm unwilling to take part in anything major when it comes to crypto and alts or even stocks, and I'm mostly focused on the Forex side of things and indices, because I think that they will govern the next major move. And again, I still think, and I've said this since we came down here last year, I said I think that this is the bear market bottom for traditional markets, for the S&P specifically. I've been saying that for, well, probably a couple of months now. I think that's the case, but it doesn't mean we can't come down and print a double bottom. It doesn't mean we can't come down, generally speaking. It doesn't mean we go straight back up to the moon. And there's other things that we have to think about. But overall, the same analysis still applies. I'm guarded. I'm still on the sidelines after taking the profits on this first stage of the pump, and now I'll be reassessing the situation day by day, really, as we do every morning, based around Forex and indices. Anyway, I'd really appreciate if you leave a comment. This is exactly the place where you want to make a like on the video, because it helps my algorithm. I've noticed it actually has helped a lot, actually, so I appreciate that. So like the video now if you like it. If you don't like it, just like it anyway. It's just, you've made it this far. And yeah, comments are very much well appreciated. Other than that, hope you have a nice day. Good luck with trading this stuff, because it's, like I said, it is not necessarily a deadly situation to be in. It's a very interesting situation to be in. If we break from here, then great. If we break down from here, no big deal. I'm happy to watch and wait and see what happens. Anyway, hope you have a nice day. Take it easy.